Welcome to another Ariaswave market update. Okay, so if you've seen my previous video, which I posted not that long ago, I spoke about XLM and how we are expecting price to fall further down. Okay, and I kept it very brief and to the point. We are expecting a 5-wave move to the downside, and we haven't seen the bulk of that move yet. Okay, so what led me to this view and change of wave count? Apart from my previous view having changed, and then I kind of had a quick analysis of that pattern and then said that there's just a little bit more downside. Well, that's changed now. So the reason for that is because since that time, a few weeks ago, I have been looking over the waves on all these charts individually and seeing how they all basically are forming a very similar pattern, and that's the pattern in which I am focusing on in this video. Now, I'm not going to worry about what happened in the past. For me, it's more to do with at least what happened since 2009. And the reason for that is because the waves are getting more complex in this era. All right, in this era of price action, things have become more complex. So, to explain this view further, basically Bitcoin came out around 2009, and we've seen the price action in that all the way up until now. Okay, and with altcoins, they came out, around 2015, roughly, some earlier, some later. And so we only got to see a certain portion of price action according to that, basically. So for me, it's a very complex scenario. It involves not only um, this broken time frame in altcoins, but also Bitcoin and what it will do. So there's a bit more I can share with you here, and that involves price targets for cryptos. So basically, in a nutshell, to begin this, what I want to highlight here is that the move up since 2009, and after this move down, I expect another similar move in length to the wave A. Okay, the wave A is indicative of the first part of a zigzag pattern, and that zigzag pattern will have another leg up similar to this, but it will start from approximately where this correction terminates, the current correction that's been in progress since 2018. So in different charts, this pattern has manifested itself in different ways. In the Bitcoin chart, the AB pattern is a lot more longer term compared to in the Dow Jones, where it's just an ABC. The C wave ended in March 2020, and then we had a D wave up, right? So this basically goes back to my previous ideas, which I had, probably like a year or so ago. And also, you'll notice when I get to Bitcoin, the same ideas coming back for the AB pattern. Okay, so this is very important to understand, that it all starts by understanding what this pattern is here, and it's a zigzag to the upside. So any market that I look at, especially cryptos, is going to be related to how I see the biggest space unfolding. Okay, so with the exception of the euro, which I'll touch on in a minute. Okay, so at the moment, we're looking at a 1, 2, and a wave 3 about to commence to the downside. Okay, it's the same thing that's happening in XLM and Bitcoin, very similar also. Um, I'll get to that obviously, but what we're expecting here is a decline that's going to take us to probably areas of confluence and interest. So although it could be back down to 0.382 in the Dow Jones, that could possibly be due to the fact that the March 2020 crash was deeper than what it was in the NASDAQ, right? But in saying that, there is no reason why this move won't cause price action to come back down to a confluence area of 0.618. 0.618, why? because that's also the GFC high of 2007, right before the GFC started. So this is a case of resistance becoming support. Okay, nothing to say that it won't fall to 50%, but like I said, we're looking for confluence here. So when it comes to corrections, Elliott Wave, I believe, did get it right when they said that price action tends to fall back to the previous wave 4 area of the previous move. So in that case, we're looking at this area here for a wave 4. So that does sit on the 50% retracement. But like I said, we're looking for confluence and we don't really know. So we'll have to count the waves as they progress. And I will be doing that, exactly that. Okay, so moving over now to the NASDAQ, it's important to understand that, sorry, hang on a sec. It's important to understand that there's a bit of difference in how the previous waves unfolded. But as I mentioned, we're not focusing on those now because all they're going to do is add confusion to what is the current price action. So all that we should be focusing on now is a 5-wave move for wave A in brackets, and then we're still in the process of completing a correction. So we had the A, the B, the C. Notice how the C wave is smaller than what it was in the Dow Jones, right? But the D wave was expanded. So this is very common, I've noticed throughout my analysis and backtesting of Ariaswave, is that D waves, when D waves are really big and expanded, the D wave within the B wave tends to be also expanded, right? Which is particularly curious at this time because of what's happening across the board with interest rates and also cryptos, right? So I'm gonna touch back on the whole going back to wave 4 area in a bit more detail when I hit the Bitcoin chart. So basically, it's the same thing going on as cryptos, but it's not exactly the same. Okay, so in cryptos, I don't believe we're in a wave E, but rather we're in a wave C. And the reason I believe this is happening is because all these waves happen so quickly and then D wave jumped up, right? And they happen really quickly. But with cryptos, the bear market since 2018 has been quite drawn out, and the waves have been pretty large to the downside and then back up again. But also the reason why the D wave looks the way it does here is because of obviously stimulus and money printing and intervention. And also in cryptos, that has also meant that a lot of a lot of cryptos have topped out. Like for example, Ethereum. Okay, I believe Ethereum made a wave 5 during this time. Bitcoin, not so much. Bitcoin, I believe, made a wave B, right? So this goes back to some previous analysis that I had made about a year or two ago. Sorry, about a year ago, probably like a year and a half roughly. I did actually say Bitcoin was in a B wave and I changed my view after that. So I never forget any count that I've had, but I do revert back if I see evidence of that particular wave situation happening here. So because I went back and took a good look at everything, including the NASDAQ, it's important to note that we have not seen a complete 5-wave pattern yet. We are still in the process of unfolding in this correction. So in my opinion here, we've seen potentially a 1-2-1-2 pattern also. Okay. So obviously I'm going to keep an eye on this one, but it doesn't appear as though this is bottomed yet, and nothing goes up in a straight line forever. We all know that. But also, if you picture what's happened here, like if you just take a good look at this chart since the beginning of time, right? We had an ABC, but we never had a D wave. So how would a D wave look if we went straight up from here? It would look completely ridiculous. It wouldn't fit anything that is even resembling a zigzag. It'd just be like this straight line up and then boom, right? You'd eventually get a crash. But the thing is, I believe, and the reason why I believe this, I'll tell you in a sec. I believe that this is going to have a bit more of a retracement. right? Because if we didn't get the retracement that we're supposed to get now, this would go up to 80,000 in the next bull run from this level. And I highly doubt that's going to happen. And I'll tell you another reason why I don't think that's going to happen is because if Bitcoin went up from this level now to create the C wave, it would go to 67 billion and a half dollars per coin. Now, do you really think that's going to happen straight away? Well, a lot of people might think so, but I highly doubt it. So I reckon to be conservative, we best off waiting for the B wave of this move to complete. Okay, so I think that potentially we could at least move back down to 50% to get a proper zigzag correction in here. And that's 50% from the end of A wave, not from the highs where we are now, because this is purely corrective and expanding. Okay, this is an expanding correction. We have no idea what kind of expanding correction is until it finishes. But the way we're going to know it finishes is because we're going to see a 5 wave move down to complete wave B in brackets. Okay, so enough on that. Let's move over to Bitcoin. So Bitcoin itself, this is one of my older views and it has a few different things going on. Now, regardless of what the first 5 waves are, I believe that potentially I was right with my type 1 week 5 wave move. It's irrelevant at this point. Well, sort of. It's irrelevant at least for now. If that's the case or not, actually, that doesn't make any sense. Sorry. Just let's just picture this as a straight 5 wave move. Okay. Up until now, this could be wave 4. Okay. Because we had waves 1, 2, 3, 4 before that. So I mean, for Bitcoin to come back down to the previous wave 4, that would mean that it had to fall to $153, right? So, but if the whole crypto space goes down to the previous wave 4, you're looking at Ethereum at around $78. Okay, so to me, is it going to be that bad? Well, we don't know. Okay, we just don't know, especially in an environment where rates are going through the roof. And you've probably seen my analysis on that. I might touch on it a little bit later if we have time in this video. Um, this is a pretty deep market update. Okay, so my original view on the end of this 2017 bull run was that this was an A wave. Right now, I've tried to wrangle this to be every kind of wave possible, even a 5 wave move at one point, which led me to think that there's something wrong with my analysis. So, going back to my original view, which I had probably a year and a half ago, this is the original analysis. Okay, this is the original Ariaswave interpretation of what's happening in Bitcoin, and it seems to have a little bit of our ground now that we're seeing this move down. But is it over completely? We don't know yet. Okay, but all I can say is at the highs, I don't think we've seen any kind of correction yet completed. Now, I think that potentially all that we've seen at this point is simply put a wave 1, 2, and a 1 with a wave 2 in progress. Okay, so we're looking at wave 1, the first wave 1. Okay, so I usually put blue for the first wave 1. Okay, and then I usually put, hang on, let me just put 2. And then I put green for wave 3s. Okay, so I believe this is what's going on here. It's just wave 1 of wave 3. And wave 2 is still in progress. We've seen an A, and then we'll probably see a B wave to the downside. Okay, so this to me, I mean, it could potentially be an A wave, but because we've seen this tiny little move doing this here, that does not fit into line with like potentially a wave B bounce to the upside. It doesn't fit that way, especially if this continues lower and breaks the last little pivot high to happen on the 1st of July around then. I expect this to go way lower and surprise a lot of people. Okay, now, when I did have this idea back when I had it first, nobody believed this would happen anyway. So who cares about what you think is right or wrong? At this point in time, everything is up in the air and all bets are off. Nobody really knows what's going to happen. So my analysis here, at least it has some grounding across different charts. So yes, it's a timely update. Yes, nothing's really moved much since my bullish call. That's fine. but what I'm doing here is just providing you some detailed analysis as to why Ariaswave thinks that this is just getting started. Okay, especially this C wave. If it's a real C wave, you know what C waves are like. Now, the only thing that I can mention that I tell my members here is that we could see a head and shoulders pattern in Bitcoin. Right? We could see wave C go down to the neckline, right? And we could potentially see a D wave bounce and then an E wave that takes us down to the previous wave 4. Okay, that may not happen. Absolutely, it may not. But at this point in time, I don't know, because look at how this 1-2-1-2 pattern's evolving. How long will wave 3 be? Maybe the wave C will take us down there straight up. Okay, so there's really no telling how that's going to play out. You'll just have to wait and see. Okay, so the point here is that I'm using all charts to come up with my new view. It's not just that I'm changing one thing in XLM. No, this is completely the different other side of the coin. So when it comes to the euro, okay, we're starting to see this break down in a much sharper manner. So if you remember my previous market update, I said, oh, we're just going to see a little bit lower. But because of the change of view, now I'm reverting back to that other view where we could potentially see 62 cents in the euro or below. That's the minimum expectation, right? Just a little bit below that, in my opinion, is probably right. Now, if you haven't seen my US dollar versus euro video, I posted it maybe a few weeks ago. This is the first view that I had, right? And then I switched it to the second view when we only needed to see a small break below this line. But now with the new view in the Dow Jones and the Nasdaq, I believe that this will probably go down and make a new low. And basically, since that high of the wave E, split in half. Okay, and that's the problem here, right? It's either this or we're not going much lower. We'll probably go down to parity, just below parity. Okay, but it's getting sharper, and this is obviously a more serious time in the markets, and we're seeing interest rates skyrocket through the roof. Okay, now if you don't remember what my interest rates analysis is, you'll probably have to go back through a few of my ideas. I have been saying that this is basically the start of a wave E, which is a 5-wave move to the upside. Now, if you go back through history, you'll see that markets can go from basically 0% up to 20% in a matter of 1 year, right? 1 year, depending on the pattern itself, sometimes it can turn into a type 2 week 5-wave move. But in this case, a wave E, after this kind of compression in the market, I reckon we're going to see a straight 5-wave move up to at least 10 to 15 or even more percentage, right? And then we're going to see another pullback to the downside. That's my view here. I don't know if this move here up is going to coincide with the move down in the markets, but if it does, then the resulting move to the upside in the markets will result in another impulsive move to the downside in interest rates to probably take it negative this time. Okay, so this is part of an ongoing pattern which I notice has been going on for hundreds of years. Okay, so if you haven't seen those videos, you can dig them up. They're in my profile on TradingView there somewhere, or on YouTube potentially. I'm not sure how long ago, because those videos haven't been uploading the whole time to YouTube. Anyway, so with having said that, just to cap this video off, I'll give you a brief view of the XLM idea. I've already posted that video, but if you haven't seen it, just a quick one. Actually, yeah. So from the highs of May 2021, we're looking at basically the beginning of a third wave down. We had a 1, 2, 1, and wave 2 still unfolding. It'll probably expand to the downside as this correction continues to unfold. But I believe that the moves up in the correction will be very short and sharp, and then the price action will continue down, probably get more impulsive as it does so. So hopefully you found this video interesting and informative. Thank you for watching.